the increase in wages should... That's complicated to explain. Hello and welcome to our second video following the roundup of the economy in 2019. This is our forecast for the Australian economy in 2020. We asked our panel of 40 leading experts and economists in Australia how likely or unlikely they think 12 different scenarios are to happen in the next year. We're looking at everything from the housing market to jobs to the Australian dollar to the economy. In this video, we will round up our forecast for the year 2020. First up is the housing market. We asked economists whether they expect the pretty dramatic house price increases we've seen towards the end of 2019, if they expect those to increase and continue through 2020, or if they expect this is a dead cat bounce, if this is a blip on the graph and house prices are going to collapse back next year. In other words, we asked them if the house price increases are sustainable. 52% of economists told us that they think it's likely that house prices will increase to beyond where they were in 2019 in 2020. More interestingly though, when we asked economists how likely it is that prices will fall, then only 12% of economists told us that it was likely house prices will fall in 2020. So the general forecast from economists is positive when it comes to house prices. Whether that will actually happen, well, we need to watch this space. Well, we also asked them about mortgage defaults. Now, this is when people can't pay back their home loan and have to get into trouble with the bank. We've seen a slight increase in the percentage of Australians facing mortgage defaults in 2019. We asked economists how likely it is that that's going to increase again in 2020, and 78% said it was unlikely. So we're looking at a comfortable enough year for Australian borrowers. The second thing we looked at in the housing market was the federal government's new plan to make it easier for first-time buyers to get on the housing ladder. Basically, if you're buying for the first time, you normally need a 20% deposit, but the federal government, as part of their election promise, have introduced a scheme to get first-time buyers on the ladder with only a 5% deposit. Now, that should lead to more borrowers in the market. You would think that would have an impact on the market, but maybe not so much. We asked economists, do they think this will have any significant impact on the market? 90% of them said they did not expect it to really have any impact at all. Now, one of the big reasons here is the borrowing limits the government is putting on the availability of these loans to consumers. For example, in Sydney, you cannot buy a house for more than 700k to qualify for these 5% borrowing loans. Now, as you know, in Sydney, you can barely get a parking space for that in many areas. We have a table on the screen here which will show you the limits you can borrow in various different cities and states across the country. As you can see, they're quite low, so not many people are going to qualify for this scheme. Finally, we asked economists where they would invest their money if they had to buy a house in any of the capital cities in Australia. Where would they invest their money in 2020? Brisbane and Melbourne came out on top. Sydney placed relatively low, which is usually the star of the Australian housing market. So, that was where economists will place their money. If you're going to invest, you might need to consider those cities. Watch this space to see how those prices grow, and if indeed they do. We have seen the employment figures in Australia, the jobs figures, fall over the last while, and it's not looking too good there when we asked economists how likely it is that the employment figures will continue to fall. 64% of them told us that it is likely we will continue to see them fall. In jobs, we've also seen wage growth slowing in 2019. So the amount of money people get paid is increasing at a slower rate. We asked economists whether that will continue to drop in 2020, and they said no. 70% of economists around that said that wage growth will not continue to slow next year. So if that's true, the majority of Australians could be looking at slightly more money in their pay packet. Well, we also asked them about retail. Now, we've seen a very difficult year for retailers in Australia. We've seen some large, higher end retailers struggling. We've seen a big shift online, a big shift to overseas purchasing too, with people like Amazon launching on the Australian market and sucking up that online customer. Well, we asked economists if new car sales are going to fall in Australia. These are generally a good barometer of a healthy economy. They've fallen recently, but it was a bit 50-50 in terms of whether economists think they're going to fall in the future. When it comes to the Aussie dollar, well, it's been dropping in value of late, and that's going to continue. When we asked economists whether the Aussie dollar will continue to drop in value in 2020, 80% of them said they do expect it to continue to decline. So that means less value for Australians traveling overseas. Maybe you want to have your holiday at home and put a bit more money in that Australian economy. Second thing we'll look at here is quantitative easing, which I'll call QE, because quantitative easing is pretty difficult to say. This is basically what central banks do when they run out of options and aren't getting any results, any boost in the economy from cutting cash rates like the RBI has been doing. When this happens, an option that's open to banks, which we've seen happen in the US and in the EU, is called QE, where they basically print money and pump it into the economy in order to stimulate the economy and then withdraw that money further down the line. Now, we've been asking economists how likely it is we'll see QE in 2020, and the number of economists saying it's likely has gone up and up and up. Now it's about half of economists. That could very well be on the cards. One of the other ways we could go, instead of introducing QE, is to go to a 0% cash rate, cutting the cash rate all the way down to zero. That would be 3 more cuts on top of the 3 we've seen, but economists think that's unlikely. 73% of them are saying they do not expect to see a 0% cash rate next year. This is kind of backed up by the RBA, who've also indicated they don't favour a cash rate, and they would probably favour QE if it did get to that. And finally, we're going to look at the big one. How likely is a recession in Australia in 2020? We've done 2 videos on this, looking at the arguments for and against a recession happening in 2020. Links to those in the description. But when we asked economists, the results were strongly against the likelihood of recession. Only 9% of economists said they expected a recession was likely in 2020. Interestingly, when we asked the public, so we've got 40 economists, we also surveyed 7,000 Australians, half of them think that a recession is likely. If you look at the 2 videos we produced, the video with the argument for recession has many more views than the video against. So there's definitely appetite for recession among the public, but not among the people in the know. So that's our roundup of 2020. Lots of links in the description, more information on those. You can follow my Insights blog on Finder for more info on the economy in 2020. Stay with us next year to find out how we go on this rollercoaster ride. If you're interested in getting involved in the conversation, tell us what your forecast is for 2020. What do you expect to see in the Australian economy next year? Comments below. We'll see if we can get a conversation going.